All right, guys. So we're going to look at an interview really quick, and this is going to be David Rubenstein. If you guys are not familiar, he actually is a creator and founder of the Carlyle Group. He's been in charge for a long time. He worked for Carter during that administration. That's where he met his wife. They both worked for Carter. His kids actually worked for the Trump administration, but I know that had to take a chunk out of his heart. But as we look at this, okay, I want to catch you up on a couple things here. Carlyle Group. Jerome Powell, the chairman of the Fed, used to be a partner at the Carlyle Group in the 90s. So, of course, Jerome Powell has a very good relationship with David Rubenstein. So whenever he's going to talk about the Fed, he's going to talk about them in really good terms. But I'm not playing this video for the Fed talk, which you're going to hear a little bit of it. I want to get to the private equity talk. But listen to how he actually talks about the Fed, because he actually has an inside track. He knows if they're going to raise rates or not. But let's hear what he has to say.
To business, if we could. Here we are on CNBC. We just talked to Austin Goolsbee about the path of the Fed. You're in the private equity business. The path of the Fed has a huge impact on your ability to borrow money and how much you pay for it. Where do you think we really are?
Well, I think the Federal Reserve is very reluctant. I don't know for sure what they're going to do. Nobody knows for certain. I'm going to interview Jay Powell publicly on July the 15th in a public setting in Washington, and maybe he'll give us some insights then. But I think that generally the Fed wants to stay out of politics. And so I've always said that I think the Fed is not likely to cut rates before the election because it would just cause too much political turmoil.
So you don't believe Austin Goolsbee at the end of that interview when I believe he was asked specifically whether the presidential race has an impact on their decision?
I said this yesterday, if you guys saw me in the live. I said there's no way they're going to cut the rates because it would look like the Fed's playing one side or the other. So right now, we're not going to cut rates. So you're looking at around 6 months of some really hard, I guess, carrying interest, carrying losses. Banks are going to get squeezed. Businesses are going to get squeezed. It's going to be a rough 3 months. But what can you do until a new president's in office? And David Rubenstein knows because him and Jerome Powell are partners, literal partners in business throughout the 90s at the Carlyle Group. And yes, let's see what else they have to say.
I know that that is the traditional line that the Fed has, and they should have that line. But I just think generally they're human, and they recognize that they'll be heavily criticized by President Trump, I suspect, if all of a sudden they were to cut rates right before the election. Therefore, I suspect the market is probably more right than wrong when it says the rates cuts are likely to come after the election.
Let me actually ask you just a Washington political question about the Fed. You know, the Fed has talked about its independence for a long time, and yet when you go back, even in the Volcker days and other times, there's been some pressure applied by presidents, sometimes very quietly, increasingly when it was former President Trump. Publicly, we've heard from, we've seen that Heritage 2025 report and others that have suggested that if he were president, at least some people that are around him want to have a lot more control of the Fed. Do you think that's in the cards?
I think that's unrealistic because I think trying to control the Fed now, given the way the country's evolved and the history of the Fed, would be damaging to the economy. And I don't think that would actually happen. I don't believe Republicans or Democrats on Capitol Hill would really support that in the end. And I think the American people wouldn't support that. The Fed has operated as the best central bank in the world for a long time. And I think destroying that would be a big mistake.
How would you?
His buddy Jerome Powell's been at the Fed since 2005. I would say he's backing him with that statement. 19 years of good service. But we'll keep going because here comes the good info. The stuff we tell you about.
You grade this economy today?
I think the economy now is probably a B+. We're not A, but nobody's probably an A right in the world right now. But we're doing pretty well. Remember, we've had high interest rates for quite some time, yet the economy is going to grow probably at 2.5% this year. That's pretty good for an economy with high interest rates. We've been predicting a recession for quite some time, 23, 24. It hasn't happened yet. Right. So the economy is in reasonably good shape.
So the economy's in reasonably good shape. It's a B+. But the rest of the world is no one's at an A. So if no one's at an A and we're predicting a recession, you tell me when it's going to happen. Is it going to happen next year? When are we going to get into the A category? When are we going to lower rates and that's going to make it get there? I think we're propped up on some fake companies here and or just top heavy, as we should call it. But the economy's not doing fine. It's not a B+, but let's control the narrative here. Rubenstein's about to tell you what the issue is with private equity. We already know it.
been a prolific fundraiser beyond some of the not-for-profit work you did, but a prolific fundraiser at Carlyle from pension funds and sovereign wealth funds around the world. Right. There is a conundrum that is taking place in private equity today, which is that there have been very few exits, meaning that private equity has sold very few companies. A lot of pension funds have not gotten cash back, which means that you can't really go to them and say, hey, send me more money, because they say, I don't have money. You need to send me the money. A lot of folks have then gone to the Middle East to say, okay, we'll go after that money. Right. Now in the Middle East, it appears they're saying, actually, you know what? We were sending you a lot of money. We need to spend some of that money here in the Middle East instead of back in America. As a fundraiser, what do you think of what's happening here?
Before he answers that question, I want to remind you, the GameStop investor, what they're telling you. Remember what I'm telling you guys. You're not against market makers. You're not against Citadel. That's not the issue here. These guys made the call. This is private equity, and they're hanging on to their positions, their companies that they can't go and sell, they can't go cash out on and give that money back to the pension funds. They can't do it because they're upside down. That's their collateral. That's their leverage. They would have to admit defeat. They would have to go back in there and buy back in on the short of GameStop and let it run all the way to the sky. Not just GameStop. There's hundreds of companies that they've shorted, if not thousands. These guys have the whole sector. And if you don't think it's trillions and billions, pay attention to what private equity is telling you. They can't go to those pension funds and ask them for more money. They can't raise more money. They can't go to Saudi Arabia and get oil money. They can do nothing. But here's what they're doing. Listen to what they're doing so that, yeah, they can prolong it a little longer. Don't worry, guys. Time's almost up.
Well, it's obviously tougher to raise money than it was years ago because we haven't had as many exits. But there's a new thing called private credit.
Yes.
And many people have been raising money in private credit, and there's a fair amount of money for that because interest rates have been high. So most of the large private equity firms also are doing large amounts of private credit, and so they've been raising money for that. And there are other things they raise money for, real estate, fund of funds. So the large private equity firms are not suffering. They could always do better, but I think you shouldn't cry for them.
Yeah, we're not going to cry for them. And we're not going to cry for you too. Okay, David? Listen, I know what's happening with private equity. They're stretched out. They're thin. You have them on the ropes, guys. I just keep buying shares. That's all I buy. I love what I have. I love the GameStop investment. I don't look for other ones. But if you guys hang on a little longer, just a little longer, these guys are running out of ideas. They're running out of options. And someone's finally going to come to the table and ask for their money back. And when they do, they have to just go ahead and say, you know what, we lost. Understand what private equity is doing, what they have done for all these years. That money locked up with general partners, the limited partners is one thing. Everyone's putting in money with one general partner. Each hedge fund has it. But as these private equity firms run out of deals to make, like I've told you, they keep passing one company to the next and for an increased amount. Go look at the carved out asset of BET that they're trying to sell now. We talked about it yesterday when they had, I believe it was Victory Sporting Goods, something to that effect, for $4.5 billion when it was previously, I guess, the valuation was $6 billion. Now it's selling for $4.5. How does it lose $1.5 billion in 1 year? It doesn't. They're just willing to pass everything around for $1 to $1 to $1. I hope you guys understand this part. I'm going to explain it just really quick at the end of this video. So the way private equity works is, and I'll use my new cards here for GameStop. It's like this. Don't worry, I bought these cards at GameStop. You guys know the deal, okay? But anyway, Kobe Bryant rookie card. So if I'm private equity, I'm going to buy this card for $100, and I'm going to hang on to it. But remember, I get my 20% of all profits, and I get my 2% on fees. So 2% on fees, I get 2 and 20, okay? 2% on fees, 20% on profit for whatever this card generates. But all I'm going to do is sell this card to another private equity firm. That's all I'm going to do. Here you go. Boom. And now they're going to get 2 and 20. And I'm going to get profits of whatever I chose to sell it to them for. And then they're going to take that and they're going to sell it to another private equity firm. And this is what's been happening to American companies the whole time over the last 40 years. And they just get another one and they pass it around and pass it around. And they'll carve out pieces to it. So let's just say it has assets. Let's say it has 3 companies within one, or just logistics or freight, and it'll have inventory, it'll have real estate, it'll have something that they can carve out of it. They'll carve it out and sell that to someone and still have a portion of this company and sell it off. But they can't show their investors any profits until they actually sell. They have to sell it to someone. And right now, private equity has no deals to make. I said this 2 days ago, and I found this video today. Awesome. All right, guys, enjoy. Yeah, we know what's going on with private equity. Hey, private equity, you're almost done. Or maybe you're not. Maybe you guys have a lot more money than I think. And if you do, well, I'm happy because I know I'm on the other side of the table and I'm going to get it from you. Peace, scrubs.